I started from what? This daily time frame. This is volatility 25 index. That's the first pair. This is what? From this side, this is 24 hours time frame, which is daily time frame. From this side, market is bearish. Can you see market is bearish downtrend on this side? Then from this side, from here, market is now pushing to the upside, showing that market is what? Is bullish, something like this. Downtrend. Then from this side, market is now what? Pushing to the what? Upside. So since market is pushing to the upside, what are we going to be looking at for? Is what? Buys what? Setup. That's buy zones, that's demand zones. So starting from this place, okay, good. So since market is bullish at this particular zone, this particular place, so you have to be looking out for what? Buy what? Zones. So you start moving from what? Higher time frame to what? Lower time frame. Move to what? Down to what? 8 hours time frame. You can see there are many zones. Unmitigated zone. Market tapped this zone. This is the first one. Mitigated the one. Started pushing to the upside. There is what? There is one demand zone at this particular place. But we are still looking out for market to what? To return to this zone, or might still not what? Come back to the zone. Depends, because not all zones that markets will what? React to. Sometimes markets will leave some zones and start what? Going to the what? To the market direction. So moving down to lower time frame again, the lower one, I say that you start from what? 24 hours time frame. That's if you want to do your top-down analysis. You guys know what's top-down analysis. Starting from high time frame to lower time frame to do your analysis. That's what we call what? Top-down analysis. You can watch it on my YouTube channel. That's Blues Capital. So first of all, we started from 24 hours down to 8 hours down. We are at what? This 4 hours what? Time frame. Because we have identified the what? The trend that market is what? Bullish on 24 hours time frame. So since market is bullish, you start looking for what? Buy setup. That's bullish what? Zones. That's bullish what? Zones. That's demand zones. Depending on what you know, you can call it demand zone. You can call it what? Bullish zones. You can call it, I don't know your strategies, but I call my what? Demand zone once it's uptrend. Once it's downtrend, we call it what? Supply zone. So that's it. So first of all, this is what? You can see the trend, how market is moving. Can you see? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. So all these are what? Showing market is what? Is bullish. The last one, market did what? Pushed to the upside. This is what? The higher highs that market created. So market is now retracing back to what? To this demand zone before what? Something like this pushing to the upside. You understand? Market is what? Created a what? A break of structure to the upside. This is the break of structure. Can you see it? This is the break of structure or break of highs, depending on what you are calling it. Market did what? Create what? A new highs. So market needs what? To retrace to what? A demand zone or what? A demand what? Level before what? Pushing to the upside. Market cannot just start what? Buying. Like market cannot just start buying something like this straightforward. Market needs to what? Push to the upside and do a retracement. This shows that market is what? Is bullish. It's creating what? It's breaking this what? Highs. This is the highs. Another highs. So market is breaking the what? The highs and respecting these lows. Can you see it? Market is not passing this what? Market is not breaking this what? These lows. So market is what? Respecting the lows and breaking the what? The highs. So market is what? Is bullish. Something like this. Market is what? Once you identify something like this, just know that market is what? Is uptrend. Can you see it? So that's what market is doing at this particular what? Place. Market is creating a what? Higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So market is now pushing what? To the downside. That's creating a what? A retracement. Do you understand, guys? Market is now what? Creating a retracement to what? A particular what? Demand zone before what? Continuation to the what? Upside. Something like this. That's it. So any question, guys?
So I was saying that there are some demand zone below that particular one that has not been mitigated. How do we know that this will not break this one and go and mitigate that one before going up?
Okay. So number one, there is not all zones that market will mitigate. We come back to. Bear that in mind. Sometimes markets will leave a zone and still not come back to the zone. That's markets will create a zone and still leave the zone. That's leave it behind without coming back to the zone. That's the rule. Not all zones that markets will come back to. Just bear that in mind. So any other question?
So the question is on that volatility, the previous chart.
The 20, is it the volatility 25 index? Okay.
Yes.
So
the demand zone you identified,
yeah,
is an area that we want to buy from.
Yeah.
Okay. Is there any form of confirmation that will be done there, or is an outright buy position that we have there?
All depends on your entry model. Once you are okay with this zone, first of all you have to know how to calculate your zones. That's your stop loss, that's your risk on a particular trade. Once you are okay with it, you can just enter. Depends, because sometimes markets might not give you confirmation entry and start moving to your direction. That's your identified zones. Market can just mitigate and start pushing to the upside without any confirmation entry. You understand? Sometimes markets will mitigate and still give us confirmation entry on lower time frame, but it depends on your type of entry confirmation. Sometimes traders wait for confirmation entry. Once you are okay with it, you go in. Once you are not okay with it, you leave it. But once you calculate the zone and the zone is too big for you or your capital or your equity, it depends. You have to choose. Will you wait for confirmation entry? Will you be available, or will you be around when markets mitigate this zone to take the trade? So that's depend on your type of your trade, your trading model. So any question? Any other question, guys? Someone that asked this question, do you understand what I said? The person that asked the question. So all depends on your type of entry model or your capital. If you are willing to risk enough of the zone, you can just place the trade with calculated risk. If you can't, you wait for confirmation entry. But bear in mind, confirmation entry has its advantage and disadvantage. Remember, it has its advantage and disadvantage. Its advantage is that while waiting for confirmation entry, you can see once the market does not give you your confirmation entry, that shows that markets will hit your stop loss, like with it or break the zone. That's the zone you are watching out for, and you might miss the trade. Depends. That's the disadvantage. You can miss the trade while waiting for the confirmation entry, because you cannot stay all day on the chart. You have something else doing, or you have to do another stuff before you might come back and see that the zone has been been mitigated already, and you cannot just jump. I don't jump inside straight.
So,
Okay.
so since we are on the 4-hour time frame,
Yeah.
it could take 1 or 2 days for price to get to that demand level.
Depends.
So do we wait till price get there, or should we find a way to sell down to that place? So I said, because this is the H4 time frame, it could take a longer time for price to get to demand, because one candle is H4.
Okay.
Can we look for sell entry to sell down to the demand, rather than waiting for 1 or 2 days?
Yeah. Okay.
For price to get to the demand level?
So first of all, we can look for entry, but remember, what's your mentors depends on your type of mentor. The market trend is your friend. Remember, this is a bullish trend. You understand? This is a bullish trend. The best entry for this is demand zones. That's buy setups. That's looking for buys down sells, because markets cannot give you a clear depends on your type of trading models. You can still find a sell setup inside this trend, but the sell must be scalping. It must be a scalp setup. This is a demand zone, and this is a buy trend. That's a bullish trend. All you need to wait for exercise your patience and wait for this demand zone to mitigate, and you can still look for entry, but the entry must be a scalp. It's not a long sell, because the main trend is bullish. So that's the answer for the question. Any other question?
So this strategies, does it have a name? Your strategies, does it have a name? Because according to how I understand everything and how the charts have been marked, I see the prices also respecting the favorite gap and the other side. So right now, like how my colleague asks, are we to look for an entry on the lower time frame as well, or still we wait for the price to get there? And how we sure that when the price gets to the bottom there, is not going to break up, it's not going to break the zone?
Okay. So first of all, no one is perfect. Trading is a game of probability. There's no an expert in this trading field. So anyone saying that he or she knows. So according to what you asked, you say that how can someone knows that this zone cannot be taken out, like cannot be penetrated? First of all, there is no expert on this trading field. This is a game of probability. We analyze and wait for market to decide. Bear that in mind. We analyze, then wait for market to decide. This is a game of probability. You need to analyze, calculate your stop loss, your risk, place the trade, then you wait for market to decide whether the markets will move your way or against your way. That's it. So any other question?
Okay, thank you, sir.
Okay. So make sure you join my Telegram channel. That's Bliss Capital on Telegram channel. So any other question?
You say that we are bullish on V25.
Yeah.
So asking this demand zone that we are waiting for to be mitigated. Assuming this demand zone is to be broken now, does it mean that we are moving to bullish, or we are still bullish?
Okay, once the zone is broken, what you need to do is just wait for some time and reanalyze. That's reanalyze your trade and know why the market did something like that. So moving down to another pair. That's crash 500. Starting from this is the crash 500, but let's do the top down analysis as usual. remember, once you want to analyze, start from higher time frame down to lower time frame. That's what we call top-down analysis. If you don't know how to do top-down analysis, go to my YouTube channel, Blitz Capital. You can watch the video there, how to do top-down analysis, starting from high time frame to lower time frame. The bearish markets are this particular zone, this particular place. This is the first one. The downtrend, market retraced to this level, then crashed again. That's pushed to the downside. After pushing to the downside, market is now what? Retracing back towards a particular level, something like this. This is the first move, the retracement. Another move. So we are expecting the market to what? Push to something like this before what? Pushing to the downside. So this is what I'm anticipating on this what? Crash 500. But remember, this is a daily time frame. It will take a long time, months, before what? This can what? Manifest. So moving down to this what? This is the first one. That's the top-down analysis. It's starting from high time frame to identify the what? The trend before you move down to what? Lower time frame. This market is what? It's creating a what? A retracement. The retracement is what? Is buys. This is a what? Can you see? Market is what? Is about to what? Create a what? A retracement, because the day time frame is what? Is bearish. But in lower time frame, market is what? Is bullish because of the retracement. So do you understand, guys? So moving down to 4 hours again. Moving down to 4 hours, market is what? You can see, market did what? It created this zone. And this market did what? It created this what? This zone. Push to the upside, retracements. The market is now was pushing to the upside to create what? To create a new high above these highs. Remember the trend, how the trends move. Market will do what? Something like this: higher high, higher low, higher high, higher low, higher high. That's market is creating what? A new highs above the previous high. This is the previous high. Market created a high above the what? The previous one. It traced back to what? A certain level. Pushed up again, breaking the what? The previous highs again. That's how markets move. This is what? The high. Market did what? Push to the upside. So this is what? The first high. Market mitigated what? The demand zone. So market is now pushing to the upside to create a what? A new what? A new highs above this level. So that's it. Moving down towards lower time frame, the 2 hours old. There's one what I noticed on this 2 hours time frame. Market started what? Creating a what? A bullish trend, a bullish move, which is what? The higher lows. You can see higher high, higher low, higher high, higher low, higher high. So now I'm anticipating market to what? To give a retracement, something like this, forwards, continuation to the upside. Because in every market expand and retrace. That the video is on my YouTube channel. You can watch it there. There are 3 phases on markets: the what? The expansion, the retracement, and the continuation. Remember, expansion, the retracement, and the continuation. For example, this expansion, the retracement to a certain level is either what? Demand or supply zone. So this is the retracement to this what? Demand zone, then the continuation to the upside. That's it. The what? The expansion, the retracement, and the what? The continuation. That's what all markets do. The expansion level, the retracement level, and what's the continuation. That's the three phases we have on this any market. As long as it moves, market needs to expand, market needs to retrace, market needs to continue. So that's it.
Yes, how do you draw your zones? Like, what do you watch out for when you're drawing your demand zone?
My demand zone or my what? Or both zones?
Yeah, your entry zones.
What I watch out for is the trend before I look for for if the market is if the trend is bullish, I will be looking out for my demand zones. If the market is bearish, I will be looking out for supply zones.
In terms of those your zones, like what kind of candle patterns gives you maybe like?
I don't trade.
Because I've noticed that
you notice that what?
Okay, most of your zones are like at the swing, at the lows, like at the extreme lows, and you don't mark like the zones in the middle.
Okay, first of all, I look for extreme zones. That's it. I look for extreme zones because the extreme zones has higher probability than middle zones. Do you understand? The extreme zones, that's the discount and premium zones. If it's supply zone, we call it premium supply zones. If it's demand zone, we call it discount zones. So I rather choose the extreme zone than the middle zones. You look for for me, I always look for the extreme zones before placing any trade. I cannot just start from the middle, but sometimes markets start from the middle. That's retrace to the middle before continuation. But for me, I prefer the discounts and the premium zones. That's the extreme zones because it has higher probability. Do you understand? Okay, for example, let me show you something like this. At this particular zone, this particular place, market did expand. Then there is one demand zone at this middle place, that at this level. Market did indicated the demand zone. Pushed upside, that's deceiving buyers before market did break the zone. So this zone and this zone now, which one did like the market respect? Is it this middle zone or the extreme zone?
The extreme gave more. The middle one was quickly taken out after it respected it for short term.
That's why I said the extreme zones. The extreme zones has higher probability than middle zones. That's what I'm trying to say. The extreme zones has more probability. That's higher probability than middle zones. From this guy, the example is from this particular place. From this particular place, you can see market created a demand zone at the middle. Market tapped the demand zone, but did not break any highs afterwards the mitigation. Market did push small, pushed a little before pushing down. That's pushing to the downside. That shows that market respected this zone. That's the extreme one. Join my Telegram channel because I'm going to send link in next 2 minutes time because we have less than 1 minute here to create a new link. So market did respected the demand zone. That's the extreme zone. Pushed to the high, to the upside. That's creating a break of structure. After the break of structure, that's after creating a new highs, market did markets retrace back to the extreme zone again. Remember, markets always respect extreme zones. That's the extreme zones has higher probability. So markets push to the downside, respecting this extreme zone again, and started pushing to the upside, creating a new highs above this above the previous one. So since market have created a new highs, I'm not anticipating what market to retrace back to extreme zone again before what continuation to the upside. So any other question before this Zoom ends? I will send the link on Bliss Capital Telegram channel.
Okay, so yeah, I wanted to ask a question.
Okay, so what's the question?
All right, so your expectation is for price to drop down to demand and then buy up again, right?
Yeah.
Okay, so I want to know, is it that you are now outrightly waiting till price get to demand? That is one. Two, if price fails to return from that point and choose to continue buying, are you looking to get any entry from there, or you will wait till whenever price returns back to that demand?
That's a good question. So the first one you asked, am I waiting for the market to return before I can buy? Yeah. The answer is obviously what? Yes. But sometimes if I see what during the retracement, if I see a good sell, I can still take the trade. But remember, the main trade is is buys. That's buy, that's uptrend. The sell, any sell you are going to sell must be must be a scalp. That's scalping. You guys know what is scalping. That's a short trade. So but the trend is the main ride. That's the uptrend is the main ride. So you need to wait for this demand before placing any trade, because that one must be a long ride. But any sell is a scalp sell. That's a short term sell. Remember. So the second question is that you say that once market fails to return to this demand zone, will I still watch out for another zone? The answer is yes. Once the market fails to return to this zone, because markets cannot mitigate all the zones. Once what I observe on this market is markets will not retrace to all zones. Sometimes market leaves some zones and continue moving to the particular direction. That's it. But in the meantime, you have to wait. Once the market shows that market is no longer going to retrace to the zone, then look for another zones. That's it.
Okay, thank you. And you said if you want to sell, unless you get a good sell, what is seen as a good sell to you?
A good sell means once the trade meets your criteria. That's your entry model. Depending on, everybody has a different strategy, remember. So depends on what you are looking out for inside the market or what you are watching out for. Then once you see the stuff you place your trade, that's a good sell. Not just once you see a red candle, you just join or jump inside the market, start selling. That's what I mean. That is a bad selling. That's a bad a bad sales. But once you see your criteria, your entry model or your type of market entry model, you can now place your trade. That's what I mean by once you see a good sell, you sell. Not just jumping inside because you know that market will retrace to this demand zone. That's not how to trade. So that's it.
Well, I don't want to sound like I'm over asking questions because I'm not the only one on the Zoom call.
No.
And I don't know if some of the informations are limited to your mentorship. I don't know if you have mentorship group. But then when you say criteria, your model, is this something you can discuss for us to see, or is it private for you? Because when you say your model, I don't know your model. So I don't know the model you're talking about. Is this something you can explain?
Okay. First of all, I trade SMC plus my model. That's I combine the SMC with my model. That's it. And the model is on my mentorship community. That's it. But what in a general aspect, what I trade is SMC, but not just SMC, because every other traders trade SMC, but not all knows what is inside the SMC. That's it. Moving down to the other pair, which is VIS50. Okay, so this is the trade, that's the market. And remember, this is 15 minutes time frame. What I always tell my students is, any trade or any pair you want to trade, make sure you do what? Top-down analysis. Make sure you do what? Your top-down analysis. Top-down analysis is on my YouTube channel, Bliss Capital. You can search Bliss Capital on YouTube and find the video there. I explain how to do your top-down analysis. Top-down analysis is starting from high time frame to lower time frame to get your entry. So let's start from high time frame, which is 24 hours. Let's do the top-down analysis. Starting from 24 hours. Okay. This is the 24 hours time frame. Can you see the beautiful trend? That's beautiful market structure. Hope you all can see my screen. Higher high, higher low, 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 higher high, higher low. So we are now anticipating market to push to create a high above these highs. Remember, markets cannot just start moving like this, something straightforward. No, market needs to expand. Remember, you trace expansion, retracement, expansion, retracement. You can go to my YouTube channel, the video is there too. That's the 3 phase on markets. So since we have identified the market structure, which shows that market is is bullish. Remember, market is is bullish now. That's the market structure is is uptrend, showing the market is pushing from from down to from this side to this side to upside. Remember, so the trend is showing bullish trend. So moving down to lower time frame, since we have identified the trend. Okay, coming to this particular place again, can you see from this place market is bearish? This place market is bearish. From this place again, market is is bullish. Remember, this daily time frame, that's why I'm saying bearish and bullish. This place market is is bearish. From this place again, market is is bullish. Something again, market is now showing the market is now kind of bearish. I don't know if it's retracement to this zone, depends. But for this particular place, this particular place, market is is bearish. These are daily time frame candles. All these are daily time frame candles. So market is bearish at this particular place. So moving down to lower time frame, which is 8 hours. So remember, market did mitigated a higher time frame demand zone. Because why I call it demand zone is remember, the market is bullish. So in bullish trend, we call it demand zones. In bearish trend, we call it supply zone. So that's it. In a bullish trend, we call it demand zone. In a bearish trend, we call it supply zone. So since market mitigated the demand zone, this is a demand zone. This is a demand zone. Market indicated the what? The demand zone, pushed to the upside, breaking this what? This size. This what? This is the internal what? The internal highs. Remember, the external structure and the internal structure is on my what? YouTube channel. I don't want to start repeating every other thing inside this Zoom call, because the Zoom section will soon end again, because this is a free section. So remember, this is the internal what? Highs and lows. All these are what? Internal highs and lows. If you don't know anything about the external and internal structure, move to my YouTube channel after the Zoom section and watch it to understand more. So this is what? The internal highs. The market what? Broke. That's the broke structure. After what? The mitigation of this demand zone, the high time frame demand zone, market took out this what? This size. So the market is now what? Kind of what? Bullish. So after what? The expansion. After the break of structure, the expansion, what else are we looking out for? The retracement. That's the retracement what? Phase. So inside the retracement, inside the lower time frame, there is something what we call internal structures. Moving down to 4 hours to get what? The internal structures, because we are in higher time frame. That's the daily time frame is the external structure. The external structure is what? Bullish trend. Remember. But so inside the external structure, which is the daily time frame, you move down to lower time frame. All those structures are what? The internal structure, because the structure is inside the what? The what? External. So that's it. I don't want to start explaining everything about external and internal structure in this Zoom section. You can go to my YouTube channel. The video is there free of charge. So moving down to these 4 hours, you can see market is what? Is kind of what? Bearish at this particular what? Place, particular what? Level. Reason for that is that there is this demand zone. Market did what? Mitigated the demand zone, but did not what? Respect the demand zone. Just market pushed, then pushed to the downside, so that this demand zone is what? It's not what? It's not good. It's useless. So this market is what? I've taken this demand zone. That's I've broken this demand zone. You look out for what? A sell what? Another what? Another supply zone. Because this is what I'm looking at for sell at this particular what? Place. So moving on to 2 hours time frame. On this what? Lower time frame, there's 1 5 minutes, but let's start from the lower time frames. Let's start from 1 hour to the zone I got the what? This particular place. This is the what? Can you see this zone? I did what? Broke structure to the demand to the downside. That's a break of structure. This is a break of structure. Retracement. Another what? Break of structure. How did I got this zone? Moving down to 5 minutes time frame. There's one what? Sorry, not 5 minutes. It's 15 minutes. There's one what? Supply zone. Because market did what? Broke structure to the what? To the downside. Can you see it? Is a what? A break of structure. Remember, market is bearish at this what? At this particular place. So we are looking for what? A short time what? Sell. Remember, a short time sell. Since the market, the main trend is what? Bullish. So any sell is a what? A scalp sell. Like something like short time. The entry must be short, the exit must be short. Like it's not a long what? Something. You need to what? Know when to exit, when to enter and when to exit. That's why we call it scalp. So this is the what? The break of structure, the retracement, the break of structure. This is the break of structure again. So we are now after the break of structure, that's the expansion. We anticipate what? A retracement, something like this. That's it. VIX 10 1x. Okay. This is the 24 hours already. This 24 hours time frame. So the 24 hours time frame, that's the 24 hours zone. You can see the what? The bullish trend. That's this side, the market is bullish. This side is bullish. This side, market is what? Is bearish. So this market is bearish at this side, that's this particular side. What we are going to be looking out for is what? A short sell, because the main trend is what? Is bullish. Remember, the main trend is the bullish trend. That's something like this. Market is what? Getting a what? All these are what? Showing the market is what? Is bullish. So the market might what? Respect demand zone and start pushing up. But for now, at this particular zone, this particular place, you can see all these are daily time frame candles. So these are a bearish moves. So since market is is bearish, you will be looking out for short scalp or short sell, depending on what you call it. So this is the 24 hours time frame. On this daily time frame, there is one what I noticed on this particular place. Market did what? Use a break of structure. Can you see market did what? Create a low retracement, broke the low. This is a break of structure. After the break of structure, after the market have taken out these lows, market did what? Increase to this this supply zone. Remember, bearish move or bearish trend, we call it supply zones. Bullish trend, we call it demand zones. Know the difference. In a bearish trend, we call it supply zone. In a bullish trend, we call it demand zone. So since this particular place is is bearish, this is a supply zone. So market broke structure to the downside. After the break of structure, market did what? Push to the upside. That's a retracement to mitigate the supply zone, the unmitigated supply zone. After the mitigation, market did what? Sold to the downside again, breaking a new lows. This is the new low that market broke. So after the break of structure, after this low has been taken out, market did what? Started retracing to this to the new supply zone. So this is the supply zone. I'm anticipating market to push to this zone before continuation to the downside, or market might change trend. But the main thing is look out for confirmation entry before entering any trade. And remember, confirmation entry has advantage and disadvantage. That's it. So all depends on what you are trying to risk and type of your entry model. So this daily time frame, and this is the supply zone. The supply zone is daily time frame. That's daily time frame candlestick. You cannot just enter from this daily time frame, because the risk will be higher. So once market mitigate this zone, you can look out for confirmation entry. Sometimes it might not give you a confirmation entry, it will just start selling, like this one. I was looking for confirmation entry on this particular zone, but market did not give me any confirmation entry. Market just mitigated the zone. Markets cannot give you confirmation entry on every trade. So sometimes market will just move on. For example, on this particular zone, I was watching out for this zone, because this is daily time frame. I cannot just enter from daily time frame candlestick. I need to wait for lower time frame confirmation. So market did tap, start selling to the downside. So I missed the trade. That's it. And this is another confirmation. Another supply zone. So I'm anticipating market to tap this zone and push to the downside, something like this. So that's it. Another one is jump 75. Okay. This is a particular trade I'm looking at for this demand zone. There are many demand zones though, but the main one is this one. This is the middle one. So this one has a lower probability, and this one has a higher probability. high probability doesn't mean that market is 100% sure, like I'm 100% sure. No, nobody is perfect. Remember, no one is perfect. No one is a guru. This is a game of what? Probability. We analyze, then wait for market to decide. Remember, no one is perfect. Me saying that market, this one has a high probability doesn't mean that I'm 100% sure that market must respect this zone. No, that's why you have to work with what? Risk management. So let's start from higher time frame, which is our top-down analysis, 24 hours time frame. Starting from higher time frame, which is the daily time frame, you notice something at this particular place, at this particular zone. What can you see? I'm seeing what? A bearish moves. All these are what? A bearish moves. You can see lower low, lower high, lower low, lower high, lower low, lower high, lower low. I'm now anticipating market to what? Create a lower high at this zone before what? Continuation to the downside. Something like this. Since market is what? Is creating a what? A bearish trend, a bearish moves that's breaking the lows and respecting the highs. Since market is bearish, what are we going to be looking at for? Supply what? Zones. That's it. We are going to be watching out for what? Supply zones. So moving down to lower time frame, which is 8 hours. So the 8 hours time frame, you can see the market clearly. This is the internal structure. You can see lower low, lower high. All these are what? Showing the market is bearish. So this one is what? This move is what? It's a retracement, because market did what? Broke structure to the what? To the downside. This is the break of structure. Remember, this is what? The break of structure to the downside. So this is expansion. The retracement is what? Is this move? This is a move what? This is the retracement. So I'm anticipating market to what? To retrace to this particular zone before what? Continuation to the downside. So moving down to 4 hours time frame. Okay, same view on jump 75. Thanks, Mr. You are welcome. So this is what? This is the zone. This is the zone I'm anticipating market to tap. That's to mitigate before what? Continuation to the downside. So this one is a what? A scalp. Remember, this is a short term what? Buy, but the main trend is what? Sell. Do you remember, guys? The main trend is the main trend, but the retracement is what? Once you are looking for buy or sell from any retracement, just know that it will be a scalp, not a long-term what? Trade. So this trade is what? This buy, there is one small buy I'm looking out for from this place. So the buy is a what? Is short-term buy, but the long-term sell is what? Is a sell setup. Is a sell what? Is a sell from this demand zone. Sorry, supply zone, not demand zone. Remember, supply zone, not demand zone. So I'm anticipating market to what? Do something like this. So that's it. The buys is a short time buy, the sell is a long term what? Sell. So moving down to lower time frame, let me show you guys how I got this what? The demand zone. This is the short time what? Buy. I'm anticipating markets to buy from. Once the market increases, I'll buy from it. If the market doesn't, then I will delete my what? My order. That's it. So this is what? A break of structure. This is the extreme zone. Remember, I always was like extreme zone. The extreme zones has what? Higher probability than the middle zones. Remember, this is a middle zone. There's still what? A demand zone from this zone. But the main one that has a higher probability is what? This demand zone. Because this is the extreme one than this one. This one is just a middle one that might get created lastly. But this is the main trend. Sorry, this is the main what? The main extreme zone. So moving down to lower time frame. You can see it. This is what? The zone. I'm anticipating something like this. This is a short time what? Buy. or something like this. Depends. Just know that, just bear in mind that any trade you are going to enter or any trade you are going to place, calculate your what stop loss before entering the trade to know your risk. Don't just place a trade, calculate your stop loss, your TP, then place the trade. That's it. Once market mitigates, if market will go your way, fine. If market will not go your way, you know that I'm risking particular what this on this particular trade. That's why some traders doesn't have what a good risk management. They just place a trade because they see a buy or they see a sell. And secondly, don't jump on any trade. Make sure you meet with your trading models before you place any trade. The next pair will be jump 10. This is the jump 10. Currently, I'm seeing something that market have left the zone behind. But let me do the analysis first before I'll start watching the pair. The first one, let's start from high time frame. Remember, the top down analysis is the main thing. Start from high time frame down to lower time frame. So in higher time frame, that's the daily time frame, what do you guys notice? I'm seeing what? A bullish trend. And you see the up, move, downs, all these are what? High, low, high. All these are what? A bullish what? Trend. This is a bullish trend. Can you see? High, low, high, low, high, low. So maybe market is now pushing to the upside to break this high, something like this. To break this what? High before what? Any retracement, something like this. So since market is bullish, what are you going to be looking out for? Is what? Buy setup. Since market is bullish, you look for what? Buy setup. That's the main trend. So let's move down to lower time frame. We have identified the trend. The trend is what? It's a bullish trend. So moving down to lower time frame, which is 8 hours. Moving down to the lower time frame, this is the 8 hours time frame. You can identify that market is what? Bullish. You can see this is what? High, low, high, low. So maybe market is now what? Pushing towards create a new high above this level. You can see market is pushing with a momentum, with a force. So you can see the daily time frame candle. Sorry, the 8 hours time frame candlestick is very what? Bullish. So this market is bullish, you'll be looking out for what? A buy setup. That's the demand zones. Remember, a bullish trend, you look for demand zone. A bearish trend, you look for what? A what? A supply zone. So this is the trend. You can see markets. This is an internal structure. Remember, this is an internal structure. You can see the trend, the high, the low, the high, low, the high. Maybe this is an inducement for me. This still was an inducement for me. That's liquidity. Because the main demand zone is from this place. Because this is extreme zone. Remember, I always look out for what? The extreme zone, something like this. Because I always love buying from the extreme zones. Extreme zones has what? Lower risk and what? Higher probability. It always has what? Higher probability than middle zones. There is a middle zone, but for now I'm not anticipating to buy from the middle zone. So there's a zone around this particular place. You see, let me check my 30 minutes time frame. Maybe it's from 30 minutes or 15 minutes, but there is a smaller time frame zone. This is the zone. You can see the extreme zone. So this is not the extreme, this is the middle zone at this particular place. Market might respect it, market might not respect it, that's it. But for me, I'm looking at this particular zone because this is the extreme zone. This is the main zone market created before what this bullish was wrong. So that's it. Any other question? Any question before we move on to another pair? Because this Zoom section will end up in less than a minute. Okay, let's move on to the VIX 100 1x. So this is VIX 100 1x. I'm anticipating market to buy from this zone. How do I got this zone? Let's start from higher time frame. Remember the daily time frame, that's the top down analysis. So identify the trend first before what? Before any other thing. This is the 24 hours time frame. We have identified the trend. This is the trend. This is the block of structure. We are anticipating what market will trace. So for now, at this particular place is what? Is small what? That's the retracement. Moving down to lower time frame, which is the 8 hours. Inside what? Structure, the external structure. You can see the market has started what? Creating a what? Higher high, higher low, higher high. So we are now anticipating what? A retracement. Remember, markets cannot just start moving to the upside straight. Market needs to what? Create a what? A high, a retracement, a high. Then we anticipate a retracement before what? Continuation to the what? To the upside. So this is what I'm anticipating on what? This 100 what? 1x. So how do I got this zone? Moving down to lower time frame. This is a zone. This is extreme zone. You can see market respected this zone. This is the last zone, extreme zone. Market did what? Push to the upside, created a block of structure. Created there was a new high. So anytime markets retraced, I'm expecting to buy from this what? From this zone. Because this is the extreme zone. I'm anticipating market to what? To buy from something like this. Then continuation to the upside.
From the 24-hour time frame, right? Can we just like mark out there as our resistance, as our support, right? Then mark the top as our resistance, so that maybe we can believe that when price gets to that level, the top, right? You can maybe sell up from there, right? Then go back to that same that level where market respected. Then maybe bounce again.
Okay. That's a good idea too. But according to me, I don't trade like that. You understand? I don't trade like that. Everyone knows what works for him or her. Maybe that's what works for you, that's what works for you every time. But for me, I don't trade like that. I trade my own entry model. That's what I always watch out for. Once the thing comes out from the market, I'll place my trade. But once it works out for you, then it's fine. But for me, I always wait for break of structure. That's I always wait for a highs or lows to be taken out. For this one, markets took out these highs, retraced these to this demand zone, pushed again, taking these highs. You understand? Well, the Zoom is recorded. I'll post the Zoom link, the recording video very soon, maybe from tomorrow. So according to me, I'm waiting for what? I always wait for break of structure most at time. That's steady. I always wait for what? Market to take out some certain levels before I place my trade. So since market have taken these highs, that's I've broken these highs, I'm now anticipating market to what? To trace this what? Extreme zone before what? Continuation to the upside.
Sir, can I ask a question?
You can ask.
Is there any kind of reason why market should go back to that same level instead of the first one there? Like any kind of maybe fair value gap or so? I don't know. Like I don't know.
Okay,
know that much.
For
is there any kind of
like this one now has a liquidity. You can see. So it created something like a low that will deceive buyers. Something like this. So some people might start buying from this zone, like anticipating from this place, something like this. You grab. So, but for me, this is not an extreme zone. This is something like middle zone, according to what we discussed earlier before this particular trade. Someone asked if I can consider buying from this middle zone. I said no. But sometimes it works. But what I always assure some people is that middle zones has lower probability, but extreme zones has high probability. You grab. You understand? I don't say that markets will not respect from here. Sometimes it works, but the probability will be very much low than someone buying from this zone. You understand?
Yes, sir. Thank you, sir.
So you are welcome.
Yes, sir. We got a break of structure to the downside. Now we are getting the retracement. I want to know, where are we expecting that retracement to? This retracement that we are getting, where we are getting this buy.
Okay.
Where are you expecting? Yes, where are you expecting that retracement to go up to?
Okay, where the retracement will reach before continuation to the downside, right?
Yes, sir.
Okay. For me, I can say I don't know. I'm not a market maker. Like, I cannot shift market, or I cannot push the market. I'm not the one doing it. So that's the best answer. We do what we analyze, then wait for market to retrace. Once, for me, I cannot tell that market will start from here or from here to retrace. Sorry, to continue to the downside, or from here. Anyway, I don't know. But once, that's why we analyze every time, because every day market moves. Apart from currency, I mean, every day is Monday to Friday. Synthetic words even on weekends.
Yes, sir. Yes, sir. But at least we have somewhere that we are expecting. At least we should have somewhere that we are expecting.
There are many places you can expect from here. Let me say we are expecting from this zone, and markets might not reach from that zone and still continue. That's the main thing. That's why I said no one is perfect. You can expect from market to reach at this particular place, and markets might not reach, markets might reach, depends. So everything depends on the markets. You understand?
Okay, sir.
So that's it. We don't push the market. We are not the market makers. We analyze, then markets will decide. Markets will decide if we are wrong or right. That's it. So any other question?
Yes, sir. Sir, I'm saying because we are buying a retracement.
Okay, yeah, we are buying a retracement, and the buying is just short.
Retracement, and yeah, and if we know where we are suggesting, then we should be careful when we are reaching that area.
We have
to not take a
once
buy.
we are buying and we have TP. We are not buying and targeting. I'm not like that. I don't do that. I cannot be buying. This is a retracement. Remember, this is a retracement. I cannot buy from. Let me say I started from buying from this zone and be targeting something. I'm buying from this zone and targeting highs. Something like this. Let me use this thing. Something like this. This is a retracement. Anything retracement needs for you to scalp. Like, the scalping means for you to have an exit point, because market can just reverse at any time because of the main trend. So the main one is for you to catch the main trend, then you can hold for long. That's it. Go and check my YouTube videos. There are many trades I hold for long. You can see the main trade, how to swing trade, is on my YouTube channel. Go and watch the swing trading method. There are many times. There are times.
Okay, sir.
There are sometimes you need to swing. There are sometimes you need to exit quickly. That's it. Markets can just reverse at any time. You are not pushing the market and you are not commanding the market. This is a game of probability. That's why you have SL, that's stop loss. Once the market doesn't move your way, Your stop loss will guide your capital. Do you understand? That's it. This makes sense. Long-term setup should follow the main trend. That's it.
Okay,
That's what I'm trying to explain.
If I want to scalp, Yeah, I don't trade synthetic as I say, like currency pair. I want to scalp. So what kind of strategy should I induce? Like, should I use?
I cannot just tell you. I cannot just tell you the strategy to use. Everybody knows what works for him or her. You know what you are using. You know what you are using. You know what works for you. You know, some people are scalpers, some people are swing traders, some people are short-term traders. Just know what works for you. That's the main thing. I cannot just say hold for long. I cannot just say hold for short time, that kind of stuff. So the main thing is that know what works for you. I always know the trade I will hold for long. I always know the trade I will hold for short time. That's a scalp trade. So I trade both swing, short time, inter trade. I don't base on one. I can see a swing trade, I will take it once it meets with my strategy and my criteria. I can see a short term trade, I will take it since it mixed with my criteria. That's it. Once you are a swing trader or a scalper, just know that once you are entering this trade, it meets with your what you are looking at for before placing the trade.
Okay, I want to ask, based on when the market is trending and then we have a little retracement before the trend continuation, like with Funaboshi, I don't know if you use a feed to draw the levels on which it will retrace to before it continues.
I don't use any indicator. I don't use any tools. I do analysis based on what I know, what I learned. That's why I said I don't just trade SMC. I trade it with my method. That's I combine SMC and my strategy. That's what works for me. If you can make use of Fibonacci and it's okay for you, that's it. But for me, I don't trade with Fibonacci. I don't trade with RSI. I don't trade with any of those tools. So
okay, so I don't know if you can. I was only much earlier. If you can make a little recap on where you really pick your zones, where you're expecting retracement to come into. Once there's a little retracement in a trend, the zones that you actually look at.
The zones. It depends on the market. Once market is moving, it always creates some opportunities. That's it. Every day, market creates opportunities. That's it. So for now, since market this is the main trend is downtrend. But something like this is actually a retracement for me. So since this is a retracement, there is a demand zone inside the retracement. This is an external structure. But moving down to lower time frame, there are some zones I'm expecting market to buy from. This is like 4 hours time frame. So I'm expecting market to trace something like this. To trace from this place until the zone before continuation. So every day market creates an opportunity. Depending on your strategy, market creates an opportunity. If you are using support and resistance, if you are using SMC, if you are using indicators, depends on what you know and how you learn it. So you watch out for it. Market always creates opportunities for that.
Okay, thank you very much, sir.
You are welcome. So let's start from higher time frame, which is daily time frame. So the daily time frame, can you see? Market is what? Market created a what? This is the last high that market created. So now market is retracing something like this, or actually it might pass this level. But for now, this is a retracement. That's what I'm trying to show you guys. This is what the retracement. That's market is creating what the higher low, higher low. it might pass this level, but for now, at this particular place, market is what is bearish. This zone, this place. So since market is bearish, this is a short time what sell. It's not a long time what move, because long time move is something like this. Once you take a trade from here, let me say we saw opportunity from this zone and took this buy, we can hold for long to take out towards this highs. That's it. But once it's not a the main trend, all you are looking out for is just a short time trade. Well, whether buy or sell, just know that it's a short time, because you are going against the trend. You are just catching up the retracement. That's it. So moving down to lower time frame, which is 4 hours, you can see the market is bearish. You can see all these are internal structure, but the trend is is bearish, creating a lower low, lower high, lower low, that kind of stuff. So this is 1 hour time frame. Let's move down to 1 hour. You can see this is the last. After this break of structure to the downside, this is a break of structure to the downside. Market retreats back to a supply zone. This is a premium supply zone. Mitigated the supply zone, respected the zone, broke structure to the downside again. That's the This is another break of structure. Created something like liquidity. For me, this is a liquidity, still a liquidity for me. So market respected. So the market respects this place before I can now know that market has left this in this zone behind. But for now, I'm still anticipating sell from this zone, because market needs to take out liquidity, mitigate this extreme zone, because this is the extreme zone, the premium supply zone. I'm anticipating something like this. That's market will take out these highs, because this like liquidity for me. Then I'm anticipating market to take out this liquidity, mitigate this supply zone before continuation to the downside.
Thank you, sir.
You are welcome. See you guys next time.
Thank you very much, sir.
Sorry, sir. The link to your YouTube video, sir. Your YouTube channel.
Are you on my Telegram channel? I will resend the link on my Telegram channel.
Okay, sir.
Okay. Just search Bliss Capital on Telegram. Bliss Capital.
Okay, sir.